So those are the main factors that are actually going to provide long-term profitability. Some of you guys may know what TradingView is, right? But for those who don't, it's basically a charting service. And I think it's also a broker as well, because you can place trades and orders and stuff like that, but I don't particularly like it. But it has some nice features. So if you are running, let's say, a newer version of a browser, I think you'll be able to just click through on tradingview.com. And I think I use my email address, my Gmail account, to log into it. So just you can play around with it. I'm not that familiar with it. I haven't really used it a lot. I used it probably once in 2018. At the time, one of my mentors was deeply in love. I think he still loves this thing. But for me, I think the one issue that I had with it, that it was one step removed from trade orders, because I was using MT4 platform. So I just prefer just entering at the MT4 platform. And I think I was just used to the MT4 platform much rather than TradingView. But if this appeals to you a whole lot better, then you can use it. If not, you can just use it as some sort of analysis, so somewhere you can look at analysis. And it also helps if you have trades running on your MT4 platform. You can sort of like monitor them from here instead of monitor them from your MT4 platform, because a lot of times if you have trades running and you're constantly opening those positions, you will have that sense of you can say anxiety, where you want to close the position. So instead of opening your MT4 platform where your trades are running, you just open um, your trading view, and you just look at where the position is. You see if, okay, you need to um, move your stop loss to break even, or you need to, I don't know, take off a bit. Let's say take off half the position. If you are in a standard contract, then you might need to take off 0.5 on that particular trade. So all of those decisions you can sort of like make here, and it does help to remove some of the emotion involved with having to watch. Because obviously, when you're looking at the MT4 platform, you're always going to click Control T, and you're going to look at where the account is. Even worse if you have it on your on your phone, and you can access it anytime. So yeah, that's one of the other things that it actually helps with. I probably need a bit more time to explain the entire thing on how empty the trading view basically works, but I'll send through a video from YouTube in the Telegram channel that I saw, which introduces the basic concept or the basic features that you can look forward to. But for me, I think the main ones that I particularly use are the long and the short, right? So let's say you open up a chart. Let's say we're looking at the USD JPY, a daily chart, okay? And we're looking to, let's say, buy at 10900. Okay, so our buy was at 10900. Or let's just do this to make things simple. Okay, right, it's a bit slow. Let me just close some of these MT4 platforms. Okay, right, hopefully that should help. Okay, so let me just delete this. Let me just throw this in the trash. Right. Okay, so this is basically where you find your lines, anywhere from your trend line, your horizontal line. There's horizontal raise. Okay, there's a lot of stuff unnecessary that you can find here. Regression trend um, sounds awesome. I know of the term regression, but never seen a regression trend. Anchored VWAP, trend angles, a lot of technical stuff that you can find on here. But let's just keep it simple and use a horizontal line. So horizontal line, let's say at the swing low at 108.408, okay, 108.408. That's what we're looking to go long on the USD JPY. So as soon as the market reaches that point, that's what we taking our buy. So now, obviously, we need to before we even think about the profit side of things, before we even dream about how much we're going to make on a position, we need to know how much we can potentially lose if the trade doesn't work out in our favor. Because that's the main principle of trading. You need to quantify your risk before you can start dreaming about the profits. So let's say 108408 is our entry point, and typically from a stop loss level, our trading system suggests that we have a, let's say, 25 pip stop loss. Okay, so we basically take this ruler here, which is the measuring tool. So we measure from where your entry point would be down, and you can see on the far right you have minus 23.9. It's 24.5 now, so that's one bar, it's 1 day, and it actually tells you, okay, so it should tell you minus 0.23%. So in terms of stop loss wise, okay, so if you get stopped out, you basically lose 0.23%, and that's your 25 pip stop loss. Now, secondly, let's say our system says we need to have a 100 pip take point. So from where our entry point would be up to 100 pips. Okay, so 100. Okay, remember the pips is on the far right, so 100. So 100.3. That's basically 100 pips, and 0.93% in terms of profit. Okay, so percentage wise profit, that's 0.93, and in terms of pips, that would be 100 pips. Okay, right. So then let's say we're looking to place a buy stop and just sort of like let the trade run. So we'd go on to this prediction measurement tools. Right? So prediction measurement tools. I haven't used all of them as well myself, and I mean, for me, I only use one or two things in any case. So I hate to complicate things. So at long position, so you just click on long position, and yeah, you just throw it onto where your entry is supposed to be, and it's going to be sort of like, I don't know whether this is like a preset because the amount of pips here in terms of stop loss is 16.7, so that's 167, and here take profit is 1.67 as well, so 167 pips. So we want to reduce that. Okay, so we want to reduce that and place that at 25 pips. Okay, so place that at 25 pips. Okay, so there at 25 pips, we have the price at 108,140. Okay, and if we got stopped out, we're losing about 0.24%, like we initially measured from the get-go, and that would be an amount of $750 in this instant. And we'll pull down our take profit. All right, we don't want to get too far where the market sort of like goes in our direction and then sort of like pulls back away from where we're hoping to sort of like get more profits, because a lot of times you might get 60 pips and that's all the market is offering, but your take profit is at 260 or 280 pips, and the market pulls back all the way and just takes your stop loss. So that does tend to happen if you place your take profits too far, especially if you're trading on a short term, or I can say mid-term sort of trading strategy. But obviously long-term trading strategy, your take profits will be a bit far. So in this case, you can see your risk reward ratio right off the bat. So 3.92. Okay, so which basically means for every 25, which is like in this case close to 4, right? So this is like 5.7%, 5.7 pips. Okay, because if it was 4 pips, I mean, if it was 25 exactly and 100 pip take profit, that would be 1:4. So for every time, let's say you were risking $100, right? So if we basically round it off, if you're risking $100 with this 25 pips, okay, you stand to make $400 on each and every single trade. So even with a 50% win rate, you'd probably still be net profitable if you let your system so like trade itself out. I think even at I don't know 30%, even at 30% probably, not quite sure. I think even at 30% you'd probably still be net profitable. Um, using a 1:4 risk reward ratio, like constantly. Right? I'm not sure if it goes down below 30%, but at 30%, 40%, if you win 30 to 40% of your trades, I think you'll still be net profitable. Obviously, your drawdowns will be a bit deeper than someone who has a 60% win ratio, but you'll still be profitable in the long run. And I think that's what most people, um, I could say, would be more focused on as opposed to extremely large drawdowns or let's say winning streaks or losing streaks. So you basically have your entry point, you have your exit point if the trade doesn't go your direction, and you have your exit point if the trade does go in your direction. So you already know right off the bat how much you can potentially make and how much you can potentially lose. Plus, you can actually measure if, let's say, you don't have a constant take profit. Let's say you use a swing low, a swing high as your stop loss. So you don't have a fixed, okay, I only trade or I only place my stop loss 25 pips away. Right. So let's say you only say, okay, I'll place my stop loss at this week's low. And then from there, if there's a potential to make 4 times that up until I get to the next, let's say, resistance level, then I'll take the trade. Right. So if that's the case, then this would be nice because then you can see the risk reward ratio right off the bat for each and every single trade that you take before you actually take it. Right. But I think if you have a fixed take profit and stop loss level where you say, okay, always take 25 pips, or let's say 25 pip loss. So my stop loss is 25 pips and my take profit is always going to be 100 pips. Then it's much easier. You already know that you're at 1:4 risk reward ratio. So you don't need to constantly look at this. Okay. So in that case, the one thing that you would have to look at on a regular basis is the position size calculator. So this is from my FX book, and it's a pretty neat tool because it allows you to like figure out the amount in terms of let's say the currency, whatever currency, the pounds or the dollars or euros, whatever your currency is, as well as the lot size that you have to trade just by taking in your stop loss as well as percentage risk that you want to apply to your account. So if we take it from the top, let's say we're using this USD JPY as an example. And so this USD JPY, boom, okay. And let's say we're using a US dollar account, and let's say the account is at 1,000. Okay. Okay, so this is the account currency, and this is the actual currency that we're using. Now this is the risk percentage, so the risk ratio, so that is a percentage base. So if you want to risk 2%, we'll just click 2. If you want to risk 3%, we'll just throw in 3 there. And your stop loss, let's say your stop loss is 25 pips, as is with the example, then you already know, okay, this is the current ask price, so 108,919, but that's automatically generated. And you just click on calculate. It's going to tell you, okay, so if the trade doesn't work out, right, you stand to lose $30, right? That's 13,000, about 1,300, I mean, units. And looking at the lots, that is 0.13. Okay, obviously we have known the last digit. So it's 0.13. That is the lot size that we're going to punch in when we're opening the position. So we're opening the trade. a lot size that we're going to use is 0.13. Drag our stop loss to 25 pips. And if our take profit is 100 pips, obviously we know right off the bat that 3 times 4, that's $120. So that's how much we stand to make on the position. Okay, you can just multiply that by the risk reward ratio. Okay, any questions so far, guys? Okay. All right, so that's basically one of the main things, if not the main thing, that you need to understand before you even open your very first position. Um, there's trading strategy part, the trend lines, the swing highs, the swing lows, the Fibonacci ratios. Those are all the fancy things that obviously bring us to a trading decision. But this is the crux of it all. Because if you can understand the risk reward ratio that you have, right, and you can understand at least what the percentage win rate, let's say. Okay, yeah, the class is recorded. I'll pop it through in the Telegram channel. Right, Tony? Okay, so with these two tools, you can then decide what your lot size is going to be before you place the trade, what your percentage risk is going to be, and where you're basically going to be placing your stop, and how much you already know how much you can potentially make and how much you can potentially lose. You're no longer in shock about when the market goes against you. Now you're all of a sudden like, okay, I didn't know it was going to be this much, right? So every single day or every single position, before you actually take it, just run it through here. Just run it through here. So you can find this on myfxbook.com. You don't even need to sign up, I think, to be able to use this. You can just even type Forex calculator, position calculator, position size calculator, something along those lines. And once you get to that, we'll just punch in all of these, right? And it's going to give you the input. So you can see if you trade, let's say let's leave everything as is, right, and just change the currency pair. Right? So just change the currency pair. Okay, you'll probably see that the lot size will change, right? So if you go into the GBP USD, it drops down to 0.12, but it's still the same $30. Okay. If we go, let's say, to GBP CAD, it'll probably change drastically to 0.15. Right. And I would think if you go on to CAD JPY, yeah, so 131 CAD JPY, and I don't usually trade the Mexican peso, right? So at Mexican peso, still $30, but you can see the lot size is 2.40. And I think I even saw the US dollar and South African rand over here. So for those who trade the rand, you see here it's 1.72. That's basically $30. But you need to understand, obviously, that when you're looking at the pips and pipettes in the US dollar and South African rand, those aren't exactly the same. That will be okay. No worries. I'll send through the video as soon as it's done rendering in the Telegram channel. And I'll also upload it in the YouTube channel. No worries. Okay, so that's basically, these are the very first things that we obviously need to familiarize ourselves with before we even jump into all the interesting things. Okay, when I say interesting, I think interesting to the people who are learning them. But to most people who've been in the industry a while and have been consistent for a certain period of time, they understand that this essentially makes up the foundation, right? If the foundation is weak, the strategy is a good one, but you don't measure your risk. You don't know your longest winning streak versus your longest losing streak. Um, it doesn't really matter how good the strategy is. If you risk 50% of your account and the strategy has a, let's say, 70% win ratio, after 3 trades, I mean, you'd probably be gone. Okay. And then you're not around for those remaining 7 wins that would have obviously, doubled your account or put you in a much better position. So key is always risk according to the account size. Right? The account might drop, at 3%. If the account drops down 500 US dollars, okay, 500 US dollars. Okay, so you'll go from risking $30 to risking only 15, right? To risking 15 US dollars. Now that's going to keep you in the game longer. That's going to keep you in the game much longer than someone who increases their risk as they start to lose, because obviously that's a I don't know, silly man's game. So the key is obviously your risk will reduce when you are doing poorly, but as soon as the account grows, let's say it grows to $10,000 now, you're no longer risking $15, you're risking $300 per trade, right? And you're potentially making 1,200 US dollars off of each and every single trade. So at that position, you can make consistent profit until, because the key is just in the beginning, you just want to be around, you just want to stick around and have the experience. And once you become consistent, obviously you can start doing some foolish things that you wouldn't necessarily do if you're starting out. Because the key is just being around for the next trading day and then the next trading day. That's how you get the experience, and that's how obviously the intuition about the market sort of like grows as well, because you become familiar with the markets you trade and they become easier in a sense. I hate to use the word easier because it takes a lot of work, but you become very familiar with them. So through experience, I mean, then you can start thinking about how to increase and sort of like maximize instead of trying to do that right at the beginning, which is what a lot of people try to do. So I'm not sure if you guys have any questions. We have about, I don't know, it's like 2 or 3 minutes left. Okay, right. So I don't see any questions. Okay, does frequency add to profits? Yeah, I mean, in a sense, if you trade frequently, it could add to your profits, but typically, the more frequently you trade, the more you risk your capital. So it's I don't know. There's no real one answer to adding to profits, because some people might trade 1 position or 2 positions a week, but since their win rate is so high, they'll make 3 or 4 times the same person who trades 20 positions in a single week, because they have to account for commissions as well and the spread that you pay for each and every trade. So your trading cost will be much higher than a person who trades 1 or 2 sniper sort of like entries. And secondly, their win rate will probably be a much higher than yours if they are very selective about the trade that they take. So I mean, it's sort of like a balance. It just depends on what sort of trader you are. If you're a scalper, then yes, frequency of trades is important. But if you're a swing trader and or position trader, you're probably going to have far less trades than someone who's scalping intraday. Right. I hope that answers your question. Okay, so you add all currency pairs to watch list for swing trading, hoping to get more trades. Okay, yeah, I mean, definitely. If you can manage watching more currency pairs, then yeah, by all means get at it. Because if you're a scalper, you're probably going to watch only small basket of markets, because the opportunities are going to be there 1 minute, that gone the next minute. But as someone who's a swing trader or position trader, you can match a basket of markets. You can go for currencies, you can go for commodities, so you can go even for indices, you know. So as long as you, it's a manageable workload. Okay, all right, no problem, no problem. Okay, guys, then let me end off tonight's session here, and we'll get back to it, I think, on Monday. But I'll send through some stuff for you to go over during the course of the weekend, and I'll also make sure that you guys get this along with the websites if you guys need that. So, guys, enjoy the rest of the evening, and I'll see you guys next week. Cheers.